Hello, and welcome to our conversation on certain aspects of accounting. In this session, we will try to see the Tata Technologies. And the reason why we are discussing Tata Technology that TT is now ready for an IPO. Will Tata Technology repeat what TCS did about 18 years back? That's the question every potential shareholder of Tata Tech is having. So Tata Technology is into automotive, into industrial engineering, industrial heavy machinery, aerospace. Its expertise in engineering and R&D, digital expertise, education and software. And now it is ready to go to the capital market. So the question which is there at the back of our mind, will Tata Tech repeat TCS? We all know that TCS tapped the capital market in 2004 and created wealth for the shareholder. So in this session, we will try to understand certain aspects of Tata Technology, their financials, and we'll leave some questions for you. So Tata Tech was a unit of Tata Motors. It was just a division of, as an information technology division of Tata Motors. But in 1994, it was spinned off and converted into a private limited company. And then it became a public limited company. And in 1996, the name became Tata Tech. Who is the owner of Tata Tech? 74% of the shares of Tata Tech owned by Tata Motors. And 46% of Tata Motors is owned by Tata Sons. And there is a reason for this message to be shared with you at the beginning. So therefore, a majority of the shareholders of Tata Tech is, of course, the Tata Motors and other subsidiaries of Tata Group, like Tata Capital, Tata Motors Finance, and other small investors. So a big chunk of the capital is in the hands of Tata Motors. And who are the competitors of Tata Tech? One of the related companies of Tata Group, belonging to Tata Group, Tata Elxsi, KPIT Tech, L&T Tech, and Infosys are the major listed company competitors of this particular company. But if you observe the book value per share of this company, because that is one of the important indicators, in my opinion, to understand the fundamentals of the company. The book value per share shows the equity per share. It shows the asset backup per share. So what is observable is from March 20 to December 22, the book value per share has been increasing from 440 rupees per share to 667 in a matter of 2 years. So what is this equity? Equity has gone up. Equity consists of capital and other equity. The significant part of the other equity is the retained profit. That shows that Tata Tech is a highly profitable company. We'll get an idea about that as we move along. The equity of the company has increased from 18,500 million to 27,500 million during these 4 years. And book value has gone up also. As we see, the book value has gone up from 440 to 677. The number of shares, observe the number of shares. The number of shares are in million here. So 420 million shares have come down to 405 million. You may ask a question, or a question may come to your mind, why did the number of shares go down? At different stages of the business, Tata Motors, Tata Tech has actually used the route of buyback of shares. So therefore, on and off, there was a buyback, and the buyback has led to the reduction in the number of shares. So, but I would also like to put a caveat here. These numbers as does not reflect the stock split, which we will pick up as we move along. What happened was that in just before the decision of this IPO, tapping the capital market, in January 14, 2023, the company has split the shares. What is splitting of shares? Splitting of share is reducing the face value per share. And the reduction of the face value of share leads to increase in the number of shares. So as a result, the face value when came down from 10 to 2, the number of shares have increased from 40 million to 202 million shares. Most of the information for this presentation I've used from the document which is submitted by Tata Tech with SEBI, registered with SEBI, that is called the Red Herring Prospectus. So the numbers that they have shown are based on the pre-split shares. Similarly, as I mentioned, the profit of the company has been rising. And the profit is not dependent on the number of shares. It's a profit is the income minus the expenses, revenue minus the expense. So we can see that the Tata Tech is a profit-making company consistently. And in the last 2 years, we can see that the profits have been increasing. As a result of which, the earning per share, another important indicator like book value per share, as we say book value per share, the book value per share has gone up. In the same manner, the earning per share has also gone up. The earning per share has increased from 5.97 to 10.45, and earning per share is a net income or profit after tax divided by the number of shares. But we should also be careful. This EPS does not reflect the effect of the share split. In other words, if you would have considered the share split, the EPS would have been around 2 per share. The revenue of the company, as I mentioned, profit is equal to revenue minus expenses. So it's good to understand where is the revenue coming from. The revenue from operations increased from 28,000 million to 35,000 million from 2020 to 2022. And what is important is that majority of this revenue is, you can see is spread over across India, Europe, North America, and the rest of the world. So therefore, the customers are all over the world. But you have to remember, 2 major customers of Tata Tech, the Tata Motors and that is Jaguar Motors Limited. So, of course, that can also be seen as a negative because you are dependent on 2 large customers, or a significant part of revenue comes from these 2 big players. Not only the 2 players and the customers, but a significant part of the revenue is from the automotive segment. And of course, over a period of time, they're trying to understand and explore the possibilities of diversifying into other aspects of the business. But we know that because of the new energy vehicle companies, particularly the startup, there is a possibility of some distribution of income, distribution of revenue. This is also an important feature that potential investors should keep in mind. that 76% of the total revenue of the company is in foreign currency. So you may ask, what's the problem? The problem is so there is a exposure to currency fluctuations. Okay, so the revenue, the top line of the company is exposed to the currency fluctuations. As a potential investor, it is always good to know the strength of the balance sheet, strength of the income statement, and the strength of the cash flows of the company. Because Tata Tech is a subsidiary of Tata Motors and belongs to the family of Tata Group, the word Tata itself has a cost. The company has a right to use the name Tata, but the company has a duty to pay, has an obligation to pay for using this brand, Tata Tech. And the money is paid by Tata Tech to Tata Sons, not to Tata Motors, to Tata Sons Private Limited. How much? As per the contract, the amount payable by Tata Tech to Tata Sons, which is a major shareholders of Tata Motors, is 0.25% of net income or 5% of the profit before tax, whichever is lower. So this is an expense, So while determining the profit, we should keep in mind that there is a possibility that, a significant part of our income goes towards this particular expense. This also will also tell us something about the transfer of money between the related parties, because Tata Motors is a parent company of Tata Tech. So money goes from Tata Tech to Tata Sons, which is also a major shareholder of Tata Motors. These are all called related party transactions. So now we come to the latest decision of Tata Tech. Tata Tech is now planning to go for the issue of shares, divest a part of the shares in the market. And so therefore, they're tapping the capital market, and this is called OFS, offer for sale. We'll understand the word offer for sale. How many shares? 95 million shares. Is the company issuing shares to the public? No. The existing majority shareholder or the promoters of the company are going to sell off those shares in the market. So this 95 million shares are not new issue of shares, but the existing shareholders of Tata Motors, Tata Tech, are going to transfer those shares. So will the company get money from this issue? The answer is no. So who will take this money? The purchase price, the money paid by the potential shareholder will go not to Tata Tech, but to the existing promoters or the shareholders who are divesting the shares. So each of the selling shareholder will get their respective shares. So who are these promoters selling these shares? As I mentioned, Tata Motors is 74% of the shares are held by Tata Motors. So therefore, Tata Motors, Alpha TC Holding, and Tata Capital Growth are the three major selling shareholders who are actually divesting their shares into the market. So therefore, money that will be raised through this public issue will not go to the company, but will go to Tata Motors Limited, Alpha Holdings Limited, and Tata Capital Growth Fund. And we can see that about 84%, more than 80% of the total shares which will be divested, which is offered for sale, are from Tata Motors. In other words, so whatever money will be raised through this public issue, 84% of that funds will go to Tata Motors. So therefore, you can see that a significant part of the money raised from the capital market by Tata Tech will not go to Tata Tech, but will go to Tata Motors Limited. So 89% of the total shares which will be divested or offered for sale are by Tata Motors. 11% belongs to Alpha Holdings, and about 1% held by the Tata Capital. So 90% are within the group. And it is important for you to understand and remember and keep this at the back of your mind. The cost at which Tata Motors purchased the shares at the time of their investment is 7.4 rupees per share. Alpha and Tata Capital is around 25. Now, why is this number important? That means Tata Motors purchased the shares or invested money in this company, Tata Tech, at 7.4. So the sale price, the issue price of Tata Tech share minus the 7.4 is a profit for Tata Motors. We'll reflect on that in a minute. And will the stake of Tata Motors reduce post issue? No. Tata Motors still continue to be a major shareholder. Besides that, there are other intercorporate deposits are also with the promoter company. So despite the fact that there's an offer for sale, reduction in the number of shares, Tata Motors still continue to remain as one of the important controlling authorities, controlling group of Tata Tech. So therefore, the prospectus very clearly says that the red herring prospectus clearly says the company will continue to be controlled by the promoter company even after the completion of the offer. So the promoter company, Tata Motors, is raising money by divesting its stake in Tata Tech. So Tata Tech's issue of shares, the Tata Tech's tapping the capital market, the money is not going to Tata Tech, is going to Tata Motors. Just to get an idea about the price at which it may happen. To understand that, let us see the competitors of Tata Tech. As we have already mentioned, the competitors are KPIT, L&T, and Tata Elxsi. And we can see that the earning, let me use first price to earning ratio, because that will give us an idea about what will be the price. The price to earning ratio in December 22, when the prospectus was given to red herring prospectus was given to SEBI, of KPIT is 83 rupees per share. L&T 40 and Tata Elxsi is 70. So the P ratio of the competitors are in the range of 40 to 80. So as an example, we can also assume that the price to earning ratio of Tata Tech will be within 40 to 80 if it taps the market in the near future. If that happens, okay, assuming that this basic EPS of 10, which is before the stock split data, so the price at which the shares will be issued will be around 800. And if you want to incorporate the impact of stock split, so around 150, 120, 150. So if the price of the shares, if the expected price of share, suppose if it is 100, incorporating the stock split, or 140 or 150, the money that Tata Tech will be raising through this public issue will be in the range of 9,500 crore to 1,430 crores. And 80% of that will go to Tata Motors. So Tata Motors is expected to get in the amount of, in the range of 800 crore to 1,200 crore because of this particular issue. So therefore, the important question which remains with us is, should I buy Tata Tech shares or should I buy Tata Motors? Because the money that will go from people like you and I and many other investors will go to Tata Motors, because a significant part of the shares which are divested or offered for sale are from Tata Motors. By raising this question, I'm not no way demeaning the potential of Tata Tech, but I'm also trying to say that it's not a bad decision to buy Tata Tech and also buy some shares of some Tata Motors share. Tata Motors market has already started reacting positively because of this decision. Because the money that will go to Tata Motors, what will they do with that money? Tata Motors has a high debt on the balance sheet. So that debt, this money can be used to write off the debts or pay off the debts, not write off. Or may use to improve technology. Okay, Tata Motors is getting aggressive into EV market. So therefore, there are two companies which we need to keep a watch. Not just Tata Tech, but because of the Tata Tech's divestment of shares by the promoter, the immediate beneficiary may be Tata Motors. So therefore, well, purchase, if you want to acquire shares, start putting Tata Motors into your portfolio because of this particular decision. And also when Tata Tech comes to the market, because Tata Tech's fundamentals are strong, so Tata Tech, whether it will become TCS of tomorrow or not, but because the fundamentals are strong, because the market is quite bullish about this company, so there is a possibility of value creation by investing in Tata Tech also. So in this presentation, I did not get into the nitty-gritty of the financials, but only raised some larger question that who are the promoters of the company? Where is the money going to go from the market? And who are the possible beneficiaries of this particular immediate infusion of capital by this? So let us keep a watch on both these companies by observing both Tata Tech and Tata Motors. But the markets have already started behaving positively for Tata Motors. I'll come back to you with more information on the financials of Tata Tech soon. Thank you very much.